Hello and welcome to this week's special presentation. My name is Jim Penna, Manager of Retirement Services here at VectorVest, and I'm pleased to be presenting your topic today, which is titled Bottom Fishing for Short-Term Profits. Back on May 23rd of 2014, Dr. DeLito wrote an essay called Valuable Information, in which he spoke about how the Derby winners shown in the views each evening provide valuable information on what strategies are working now. Now, I'm going to take that concept here and apply it to bottom fishing for short-term profits. I'll focus on three main points. First, we'll look at a specific market condition. Next, we'll illustrate how to find those Derby winners in the VectorVest views. And then we'll take a look at and define the proper entry point. I'm going to start with a slide of a 5-year look back of a market timing graph that has on it the MTI, or the market timing indicator, up top, and down below we have the buy-sell ratio. Before we get into that, I'm going to jump into the program, and let's take a look for those who may be new to the program. The MTI, or the market timing indicator, is also referred to as the underlying trend of the market. It takes the price of the VectorVest composite, relative timing, and buy-to-sell ratio, and rolls those three components into that one indicator. The BSR, the buy-sell ratio, in the VectorVest program simply takes the number of buy-rated stocks, divides it by the number of sells, and gives us that ratio, which is down at 0.18. Now, the buy-sell ratio is a great indication of an underlying health or weakness to the market, and of course down at 1.8 it's showing some weakness at this time. So with those definitions in hand, let's go back to our graph, and what we want to do, that specific market timing condition I was talking about, is we're looking for oversold markets. What we want to find is the MTI here on the upper graph has this green line that I imposed here at 0.60. Again, on the 0 to 2 scale, we say that at 0.60, in tandem with the buy-to-sell ratio down below 0.20, represented by this red line down below, indicates to us historically an oversold condition in the market. And then at that point, the market is more likely to go up than it is to continue to go down. Now, that doesn't mean once these numbers are hit that the market will automatically spike up. It can linger there for a little while, but we're going to pay attention so that we can get in when it does start to move back up. So I'm going to focus on some of these dates back in May and June of 2010. 2011 was a tough year, so we were down below that level for a while. 2012 again, and then we'll take it more current, October of 14, and again in the current condition that we're now in. The goal is to show how time and time again the proper search with the proper timing will allow you a great opportunity for short-term profits. I'm going to start by going into the program. We'll go to a Graphs tab here, and again we're back at this just over 5 years, about 5.5 year look at a market timing graph. And I'm going to start, and the date really almost doesn't matter, but we're going to show once again how it does work over and over. And I'm going to start back on 5/20 of 2010. And on this date, that MTI and the buy-sell ratio were both down below those levels. The MTI was at 0.55. The buy-sell ratio had crossed down to 0.12. And so we'll start here. The process we want to walk through is pretty simple. All we're going to do on this date, when we see that violation of the 0.6 and 0.2 level, is we're simply going to go to the VectorVest views. In this case, we'll need to take it back to 2010, and that was May the 20th. And each evening in the VectorVest views on Friday nights in the strategy section, we're able to see the top Derby winners, or the best performing strategies on that particular day. In this case, they were all bearish, and so our signal to start our bottom fishing method was not in place. We would simply wait till the next day, take a look at the VectorVest views. In this case, it would be the Friday night strategy section. Once again, we would check. That night, the Derby winners were again all bearish. Now, I would follow that process as long as the MTI and buy-sell ratio stayed down at those levels, and in this case it would have taken me to May the 26th. So in the timing section on May the 26th, here I'm able to find the top 5 Derby winning strategies for that day. We're all bullish, and as it turns out, all bottom fishing strategies found in our Unisearch program. So to start, I'm simply going to walk through the process to show the method that we would apply here. On that evening, after seeing the bottom fishing strategies in place, the first thing I would do is go to the Unisearch tool. In this case, once again, we have to take it back to 2010 on the date of May the 26th. And I'll come over to the left-hand side here where my search directory is and find the searches-bottom fishing folder. And here's where we'll find 20 or so different strategies designed to help you find decent stocks that have been beaten up in price during a downtrending market. So that very first search on that evening of May 26th was silver singles. I'll double click on that search. It brings up the search. The sort here is relative safety divided by RT. It's a common theme. We're looking for stocks with low relative timing indicators, again having that ability to explode from a bottom. Next, I'm going to hit quick test, and let's take a look at how those stocks would have performed day over day based on the information we had in hand. So if we run that test on that very first day, May 26th, when we saw the bottom fishing strategies in place, had we purchased those stocks the next morning and held them through that day, we would have had a nice gain just over 6%, 10 winning trades, and no losers on the day. We can move on. Let's see how that test would have worked had I held on an extra day. Would have given back a couple of percentage points, but I still had 10 winners and no losers. So keep in mind, most of these, not all of them, but most are lower price stocks. So we are looking at a short-term day/swing trade. So a tight 5% or 5% trailing stop would not be unusual in these cases. And so we can lock in some of those gains. On that same day, jailbreak, no contra ETFs was the next bottom fishing strategy on the list, one of our most famous bottom fishing strategies. So let's take a quick look at how that one would have performed on that day. I'll go ahead and run the search on that same date. Again, this is VST divided by, or RT, which will bring the low RT stocks to the top. Let's go ahead and run that search. And over the first day, from May 26th to the 27th, we had a nice gain up 10.21%. Again, 10 winning trades, no losers. Had we held it a little bit longer, again, assuming our stops were in place, we'd have given back just 1 percentage point, still over a 9% gain, 8 winning trades, just the 2 losers. So the process is as simple as that. Instead of clicking through more examples, what I've done is built a few slides here just again to show how time and again these same searches are showing up at the same time here. So through 2010, that same process worked very well. In 2011, the MTI and the buy-sell ratio found themselves again down below the 0.6, 0.2 levels. And so on 6/20, we look at the Derby winners in our timing section, and we can see that familiar name again, Silver Singles is there. Pirates Long is also a bottom fishing strategy, as well as Blyer's bottom feeders. So these were 3 searches from the bottom fishing folder that made the list that day. And so from there, I ran some quick tests for the Derby winners on this date. On 6/20, I ran Silver Singles. On the first day in play, we got a 10% gain, 10 winning trades, no losers. And then on day 2, it bumped up even higher to a 14% gain. Again, still 10 winners and no losers. I did the same thing for Pirates Long, another great bottom fishing search, almost 7% on the first day. And again, that bumped up to 8.7% on the second day. 10 winning trades, again, no losing trades. And finally, Blyer's bottom feeders. And in Blyer's bottom feeders, again, on the first day, over 9%, bumping up to 13%. Had we held on, of course, being sure we put in those tight trailing stops or stop criteria on these stocks. October 4th of 2011, same situation with the MTI and buy-sell ratio violating those levels. We have the top 5 winners in the Derby for that day, all bottom fishing strategies. Let's take a look. Jailbreak, once again, 9.5% on 10/4 through holding it through 10/5. If we held it that extra day, it bumps up again to 15%. This is simply going in, finding the best Derby winners, and entering in the next day, provided the entry point is in place. And let's go into the program and take a look at how we would employ that entry point. If I go back to a graph, the time we're looking at here is now October of 2011. So let's take a closer look, October 4th to be exact. On that day, we see that the MTI and buy-sell ratio, again, we're at historical lows there. If I slide in even a little bit closer, that's the date that we saw the bottom fishing strategies appear in the views. The next morning, after the bottom fishing strategies appeared, we're able to see that the market did open higher than the previous day's close, so we did get movement to the upside and some follow through, and that is the entry point for entering your trades. Also on October 4th, we ran silver singles again, and again 7.75% on the first day, all winning trades, 10 winners. Kept that winning streak in place, bumping it up to 12, almost 13%, holding it through the next day. And another one of our favorites, Blyer's bottom feeders, on day one did have 9 winning trades, the one loser at 9, just over 9%. But again, that too bumped up, had you held it an extra day, applying the stops to up over 15%. So the goal here is to show the similar names that continue to pop up, same searches, under the same conditions, providing these type of explosions from a bottom. I'm going to go back in the program, and let's take this to a 1-year look, and we'll take a look at a tough time in the market back in October, mid-October. Again, the MTI and the buy-sell ratio found itself at these historical lows. On 10/15, we take a look at the views. And on October 15th of 2014, under similar conditions, once again, our familiar friends come back to the top. Jailbreak, Russell 2000 sorted by RT ascending, bottoms up, Pirates long, silver singles, all of these coming up once again. Let's just take a quick look at what Jailbreak would have done for us once again on that day. So we'll run our search on October the 15th of 2014, and there's Jailbreak. Let's go ahead and give it a quick test. And of course, we'll just go to the next day, and right out of the gate, just like a good horse will do, 10.88% on day one. And let's just see, had we held on an extra day, put those stop prices in, we're all the way up to almost 20%, 19.75% gain on that one. And so why is this important? Well, let's go back to the graph, to our 1-year graph, and we'll take a look at the current situation that we're in now. As of today's close, the MTI did find its way back above the 0.6 level after hovering down below it for a while over the last couple of weeks, given the volatility, and the buy-sell ratio also lingering down at these historical lows. And so I showed how these examples work over time so that we can turn them into actionable items now given the current market condition. August 26th was an example. On August the 26th, we'll scroll in a little bit tighter here, we had an up day in the market. If we go to the VectorVest views on August the 26th, just a couple of weeks ago, we'll see once again bottoms up and a different name, blue chip bargains sorted by RT ascending. So we'll take a look at those real quick and see how they did. Bottoms up on August 26th. If we run that search, we'll quick test the top 10, and we had a 14% return, 10 winning trades, no losers on bottoms up. Holding on an extra day, we would have bumped it up even more, almost 25% gain on bottoms up. So for this valuable information, we have a checklist and a set of guidelines here I put together. Number one, remember this is a short-term trading method, so allocate assets accordingly. You don't need a $100,000 portfolio to apply this method. Number two, consider the tight stops we talked about, 5% at order entry, or perhaps 5% trailing. Once the stock begins to rise, you can change that stop. Right? Always remember for any method that risk management starts at order entry, so you want to have that stop criteria in place. The third point here is always read the views. Read the VectorVest views, watch the color guard, and make sure we're aware of what strategies are working now. And this is valuable information. Nobody else has it. Nobody else does it. So we thank you for joining us here at VectorVest. If you have any questions, please don't hesitate to call 888-658-7638. And I thank you for taking the time.